now I think YouTube's gonna like us. Let's see. And so that's a good reminder for everyone, right? Is that we live stream every single week to YouTube, and it is there. I know that sometimes people have day jobs that they can't join us on this Zoom, so we want to make sure that they all know that it is live streamed every single week to at HGI Team Legacy on YouTube. So make sure that you guys subscribe to that. If you like anything that's said or have questions or want to watch it again, it's always going to be there for you to go back and reference and listen to again. And also to share with your new teammates. So as you see something that's great or that you love or you feel like is super helpful, which is everything, right? Flag it for yourself, and share it with your teammates and put it in your WhatsApp groups and things like that. Because that is the goal, right? Is to create this content for all of us, to have this education, all of these pieces, but also to record it while we're doing it. So then we have it at our fingertips if and when we ever need it again. So today we're going to go back to the basics. I think it's really important sometimes, we get into all of these big technical conversations about how things work and, cost and fees and abacus and FNAs and all of this stuff. But I want to take it back to the very, very basics. And I want to make it simple because I think for all of us, that's where we have to be. In order to be in a duplicatable business, which is obviously the goal for all of us, right? Is to duplicate ourselves, to teach our teammates. We have to make it simple. We have to make it easy. So the first thing that I'm going to share with you guys, and you guys have seen this before, is our total business system flyer. So if you look at this, on the left-hand side, we have our distribution, right? And on the right-hand side, we have our production. So when we talk about the 6 steps and 8 filters, typically we're talking about that from our distribution system. How do we grow our business? How do we grow our team? Prospecting. My team has heard this like, probably I hope that they can mimic it in their sleep because they've heard it a lot for the last few weeks. But prospecting, approach and contact, presentation, follow-up, startup, and then finally duplication. But once we've done that and we talk about the production of our business, right, that group helps us move our products. But the production of our business is what we actually do with our clients. So those 6 areas are simply increasing cash flow, debt management, emergency fund, proper protection, building wealth, and preserving wealth. And with every single one of our clients, you're going to see that that's what we're going through, right? When we sit down with them and we talk to them about their personal financial plan. Sorry, I'm managing all these people too at the same time. So as we talk to them about their personal financial plan, we're really literally reviewing all 6 of those areas: increasing cash flow, debt management, emergency fund, proper protection, building wealth, and preserving wealth. In the traditional world, most people skip to step 5, right? Most people build wealth. I had a meeting yesterday with a pretty affluent client, and he's like, I want to know, what's your wealth plan for me? What does this look like? What are we going to do? I'm like, I don't have a clue what you have. Like, we haven't even had that initial conversation yet. I can tell you conceptually how all these things work, but it doesn't matter unless I know exactly what you have. And we're going to look at literally everything. So going through this step by step by step, and you'll see this too on the simple FNA and Abacus. And also I'm sure on the regular one too. It literally lists out these 6 steps. So what is most people's biggest problem with their money? And feel free to unmute. We're gonna play together today because I like when you talk to me instead of me just talking to you. So what would you say most people's biggest financial problem is?
I think in general, we might not be aware of where we are with our financial situation.
Probably, absolutely. Education would be one of them. What were you going to say, Mitchie?
I think a lot of people live beyond their means.
Which means what?
They don't save money and they're living paycheck to paycheck.
Because they don't make enough money. Right? Exactly. And I think it is education and I think it is income. So most people's problem is something that we can fix with our business opportunity, but we can't fix with our products and services. If you don't make enough money, I can't fix that unless you come to work with us, right? Unless we help you from, oh, sorry, I see these texts coming up. No roadmap and no directions. Yes, for sure. Absolutely. But if you're not making enough money, that's where we have to start. That's why that's step number one. When we talk about goals and dreams and we take that F&A and we ask you, if I could wave a magic wand and tomorrow looks exactly like you want it to look like, what is that? A lot of times that's coming from income, right? That's coming from cash flow. That's their dreams because they've suspended their disbelief and now they're like, okay, maybe I do have money. Maybe I did win the lottery. If I win the lottery, I'll allow myself to dream. And that's where we need to start. We can tell you exactly where you're going to be based on what you're doing right now. But if you want more than that, we got to make more money. And I tell people all the time, I don't care what you do. Obviously, I'm pretty partial to what we do. And I think you can make a lot of money. I think you can do really well. Everybody in the world needs what we have to offer, which means that it's a great business opportunity. But I don't care if you start a lawn care business. I don't care if you flip things on eBay. I don't care if you're an Amazon reseller or whatever it is. I don't care what you do. But the answer is that you need to make more money, right? So that's step one in our conversation. And when we're talking to people, that is our education. And you guys have seen the income calculator where you can literally put that in and say, all right, brand new person, day one, 45% contract level, average, $300 a month contribution from a client, you're going to make $1,600. That's pretty significant, right? That is a great way to increase your cash flow. If they don't have any money that they can set aside, okay, come work with me, sell one policy a month. Now we have $1,600 a month that we can play with, right? So it gives people an opportunity where sometimes they don't have one. Step number two is debt management. And that's what a lot of you guys said, in the comments on the screen and also, just in conversation, is debt management. So now that we've talked about increasing cash flow, and we're not doing all of these independently, this is a simultaneous conversation, right? So we're having this big general conversation together, and then we're going to talk about solutions and what we're going to do with them. So step number two is debt management. Why do people have debt?
Because they're living beyond their
They
means.
don't have an emergency fund.
Because they're living beyond their means, because they don't have an emergency fund, because they don't make enough money, right? And sometimes it's just simple education. But, assuming that they have debt, but they're overpaying everything, just that tweak of instead of overpaying 5 credit cards, overpay 1. And when that's paid off, just that simple snowball or avalanche method, like teaching them that it would blow your mind to see clients go, God, I knew that. I don't know why I'm doing this. You're doing it because we're considering our money as emotional, not mathematical, right? And our money is always mathematical, but we have to remind ourselves. So even though it is simple, common, regular things, you have to repeat it to people. Even if you think they're brilliant, even if you think they know everything, just say, I'm sure you know this, but, right? You don't have to be condescending to them, and you don't have to, apologize for saying that. Just say, I'm sure you know this, but, and give them that piece of education. That's what is going to set you apart from everyone else out in the world doing what we do, is that piece of education. That's what will set me apart from this guy yesterday who said, why should I use you? Number one, because you like me more, like duh. And we're really good at what we do, but we're going to teach you, right? We're going to teach you every single step of the way, not just these buzzwords that you've heard on TikTok and YouTube and all these other places. We'll deep dive with it. If that's what you want to do, that's what we'll do. So be that constant source of education for your clients. Step number 3 is emergency fund. I think the biggest aha moment for most people, at least recently, was COVID, right? I think 2008 we could talk about emergency fund, but that was for everyone. But with COVID, right? 2020, people lost their jobs for no reason. They didn't do anything wrong. They didn't know what was going on, but they also weren't prepared. So what happens if you lose your job, even if it's just for a moment, even if it's just for 3 months or 6 months or something like that? Can you afford to continue living without an emergency fund? For most people, the answer is no. And so that's a conversation to have. It doesn't mean I need to pay off my debt, get my emergency fund fixed, and all of that before I get my life insurance or before I start building my wealth. It is a simultaneous conversation. We might not can do it all at the same time, but we have to teach them that. We have to educate them that. We have to talk about that to them. Step number 4 is proper protection. So proper protection is obviously life insurance, making sure that they have enough. So what's the formula that we use to determine how much life insurance someone needs?
The dime.
The dime. So tell me what that means, Jade.
Debt, income, mortgage, and education.
Tell me about income. Tell me what I do with this. Teach me.
Well, roughly we use 10 times the spouse's income. If they have kiddos who are really young, it could definitely be longer than that, but at least in the next 10 years,
Right.
replacing that income.
Awesome. Thank you. So we take their debt, we take their income times 10 years at minimum. So if it's 100,000 a year, then that's $1 million, right? Times 10. Add it to their mortgage debt plus any kid's college education they want to pay for, and that is the minimum death benefit need that client has. I think a lot of times when we present a dime, it's a much bigger number than you expected it to be or the client expects it to be. So a lot of times we're like, I'm not going to tell them that. I'm just going to tell them 250, right? And we take that objection that was never given. But if you take a moment here and you teach them here exactly what life insurance is for and what it should replace, 9 times out of 10, you're going to sell every single penny of it. And if you don't, it's because they can't afford it, not because they don't want it or they don't understand it. So in that situation, if I feel like there's hesitation there from the amount or the cost or whatever, I'm going to say, listen, I'm going to teach you how much life insurance you need. We might not buy that much, but I'm still going to educate you because that's what I'm doing, right? I am teaching you how money works and what your choices are and what your options are. So proper protection, I think that's definitely something that we take care of in the first appointment or 2. Everything else, yes, we want to get out of debt. Yes, we want your emergency fund taken care of. Yes, we want to build your wealth. But if you die tomorrow, everybody's in trouble, right? If you get sick tomorrow, everybody's in trouble. So that's an immediate urgency conversation. Step number 5 is building wealth. So now we've kind of talked about everything, and this is where we're going to look at what are you currently doing and what can you afford to set aside on a monthly basis? I need to know both of those things, right? I need to know current 401ks, if we're contributing, if they're matches, what is happening there. And I also need to know how much you can afford to set aside on a monthly basis to reach your goals and dreams. If the answer is 0, then I know what I'm working with. If the answer is 1,000, then I know what I'm working with. But if I don't ever ask that question, then I'm just proposing, okay, well, I think if you did $1,000 a month, this is what it would look like. Great. But if you don't have $1,000 a month, can't do it, right? So we have to ask the right questions when we're having these conversations. Every single person and every single financial person wants to skip straight to step 5. I call that like sexy money, right? That's make me rich. Like I have this hat. I wish I had it right here. I'd put it on my head, but it says, I will make you rich. It's a pretty fantastic hat. But that's what people want to step to, right? That's the initial thing that they want to go to is building wealth because that's what they're excited about. And that might be why they sat down with you. But if you don't do it in the proper order and you don't make sure that financial plan has a proper foundation, just like building a house, if they have an emergency or if their debt goes crazy or if they lose their job or something like that, then all that wealth you built for them is just going to spiral around you anyway. So make sure that you put that step in place. And then finally, step number 6 is preserving wealth. We have the easiest way for anyone to preserve wealth, and that's through NetLaw. It's a software platform that they can do from the comfort of their home. Spoiler alert, most people won't. I can tell you that in almost 24 years in this business, I'd tell you at least probably 99.9% of my clients for the last 24 years say they don't have a will and they don't have a trust. They say, I know I need to do it. I just haven't done it. Why? It's not a fun conversation, and they don't want to take the time to go sit down with an attorney. So just because you recommend net law doesn't mean that they're actually going to do net law, right? You still need to probably walk them through that, just like you would their life insurance application, annuity application, things like that. So what we're offering to people is this full conversation, not just a piece of that conversation, right? Everything, and we're teaching them everything. Before, we're not just looking at that one piece of the puzzle. I'm sorry, I can't read y'all's chats and talk at the same time because I'm a one-track mind kind of girl. So it's where we are today. If you have something magical to say, just unmute and interrupt me. It's fine. Maybe don't do that, but because then I'll be distracted again. But anyway, so every single client, we're giving them this value. We're delivering this value of education. Every single step, we're going to at least make sure that they're either covered or they know what they need to do to get started. And again, we might not can fix all of their issues with our magic wand day one. It might be something where, hey, we're going to do a term policy on you because this is your catastrophic issue, but you got to make more money. And until you make more money, I can't help you because there's nothing else for us to do. And sometimes that happens. And sometimes it's just what do we reposition? What does that look like? So I wanted to go back to the basics of that, just so you saw that and just so you remembered with every single client, that's our value proposition to them. That is what we're giving them, is this financial education. Matt, I know you're on and I appreciate you being on. And if you need to interrupt me because you have a schedule, then interrupt me. But if not, I'm going to take a few more minutes and then I'll add you back.
I'm here, ready when you are. Do what you got to do.
Okay, I'm going to take a few more minutes and then I think it'll be a great segue for you. And thank you for joining me on this quick, short notice.
Absolutely.
Okay. So the next thing that I want to show you guys is we haven't talked about it in a while, but it's a presentation that's beautiful because I did it, which means it's pretty simple, right? Which products do I present? When I'm talking to my clients and I'm doing an F&A, which stands for Financial Needs Analysis, what am I looking for when I go through each of those areas, of those 6 areas that we just talked about? Who can tell me? What am I looking for?
Monthly money and lump sum money.
Monthly money and lump sum money, right? And it says it right there across your screen. I'm looking at those 2 things because that's really the only thing I can work with. I can give education and I can maybe redirect some things, but ultimately it is how much monthly money do you have, even if we're repositioning it from other things, and how much lump sum money do you have? Keep it very, very, very simple. That's all you're looking for. And as you go through this F&A, where are your areas of opportunity to make money? Truthfully, just not product names, but just what are the, out of the 6 steps, can you make money on increasing cash flow? Remember, we're playing together today. Can you make money on increasing cash flow?
No, it's not a commissionable product.
It's not if they came to work with you, yes, but probably at this moment for the process of this presentation, that's just education, right? Can I make money on debt management?
Nope.
No, we don't.
Okay. Can we make money on emergency funds?
Nope.
No.
This education.
Can we make money on proper protection?
Absolutely.
Yes. Can we make money on building wealth?
Absolutely.
Can we make money on preserving wealth?
Yes.
Thank you for playing, Gail.
You're welcome.
I'm going to send you a Starbucks gift card for playing with me today. So monthly money and lump sum money is what we're looking at in step 4, 5, and 6. Step 4 is proper protection. Step 5 is building wealth. Step 6 is preserving wealth. Keep it simple. Understand what you're looking for. Solutions in those areas. So going forward, what products do I represent? So the goal of an F&A, which stands again for Financial Needs Analysis, is to gather all of the information to make an educated recommendation for your client's future. By asking all of these questions, you not only help them more, you help yourself more, right? It gives you more opportunity to help them, but also more products and offerings that you can recommend. Again, you're looking for 2 things when reviewing an F&A for recommendations: monthly money and lump sum money. Monthly money, assuming all is the same, right? Everything is exactly the same as what we just talked about. How much can you afford to set aside monthly to reach your goals and dreams? It is always the very last question of my F&A. And then you sit down and you close your mouth and don't ever say another word. Why? Because if you feel like they're broke and you're like, I know you really don't have anything, and you feel like you're in this uncomfortable situation, they're going to tell you zero. I've met with plenty of people that I thought were broke that told me they could set aside $500 a month. And they did, right? Because they're committed to their goals and dreams. So don't answer that question for them. Sit there until they give you an answer. And they'll also try to say, well, what if everything's paid off? No, no, no. Exactly as it is right now, the debt, the expenses, the savings that you have going into your 401k and your emergency fund, all of that. Outside of everything, if they're, I don't know, I need to put my budget together. I want your gut response. And I always say that because your gut response is probably the truth. If you have to go cut off a couple of your streaming accounts in order to afford what we're doing, it's possible that you could do that, but the probability of you keeping it isn't, right? Because most people would rather watch TV than save a retirement. I know it's dumb, but that's what happens. So review all of their other data, overpayments on credit cards, mortgages, cars, overfunding of 401k, and that's the total amount that your client can invest monthly, right? Comfortably monthly. We're just looking at everything on monthly money. What are lump sums? Lump sums are old 401ks, IRAs, other retirement plans, large balances in a checking and savings account, or inheritance now or in the future. So when you're asking these questions and when you're analyzing this data, that's simply all you're looking for. How much monthly do I have that I can redirect? And what lump sums do I have that I might put somewhere differently? So going forward, what do I do with monthly money? So think life insurance. Think IULs, think monthly contribution to market accounts. You can see some of the product providers. We have 1 million product providers. These are just some of them on my presentation from before. So North American, Wealth Format System, Corebridge, Nationwide, Annexus, F&G. We can all do monthly money with those companies. Now, lump sum money. What are we thinking from a lump sum money perspective? Think indexed annuities, think land banking, think actively managed money. So you see some of those logos on here as well. CalChoice is land banking. WFS is actively managed money. The rest of them would be some sort of indexed annuity. But we have all of those options that we're talking to our clients about. Indexed annuities would be either for accumulation because we want our money to grow safely, or for income because we want our money to create an income stream for us at retirement. And then finally, we've got other opportunities. So remember, think, wills and trust for the step 6. And we also, from the proper protection section, we've got health insurance, Medicare supplements, things like that to take care of that with clients. But I think if you keep it super simple and you just talk to people about lump sums and monthly money, and that's what you're looking at when you're analyzing this data, I think you'll be a lot more successful. It doesn't have to be, for most people, it shouldn't be this overwhelming conversation because most people don't have enough money to have an overwhelming conversation, truthfully, right? So just as you're looking through things, look at that. Now, I want to say a huge thank you to Mount Salvatore for me texting him an hour ago and be like, hey, you want to be my guest today? Because everybody else is on a plane, right? And not just because everybody else is on a plane, but our normal Wednesday players are on a plane, right? So I was like, Matt, you want to come in so they don't have to hear from me for the entire hour and share with us about Corebridge and just some of the things? And he graciously said yes. So I appreciate you very, very, very much for doing so.
Absolutely. Happy to be here. And before you drill me with questions, I wanted to touch on a couple of things that you said. And I apologize for your background noise. I am at a conference, which is where I spend most of my life at conferences. So here I am. But I took a lot away from this conference. And every time I have the ability to see speakers on stage, there's always things I get from that. And I hope that you feel the same way. When you hear people speak, it's not that you need to memorize everything or absorb everything. It's take a couple of things out of those conversations and implement that into your next conversation. So, just in the last 20 minutes, I heard Kimberly say a couple things that I want to touch on. The first is the most recent thing she said was the overwhelming conversation. I think most people, when they think about financials, they think it's an overwhelming conversation, but you're absolutely right. It's overwhelming because it's foreign to them and it's not what they think about each and every day. We're focused on our families, we're focused on our careers. We don't think about our monies. We don't, unless you're in this space, you're not thinking about what's taxable, what's not taxable, when are the penalties, when can I access this fund, when can I use this policy, right? They're not thinking about that, but we are, right? And so I think the most overwhelming part is that nobody's ever simplified it for them. And at the end of the day, a lot of what we do is very simple. It's very simple to explain. It's very simple to put people into a better position as long as they're willing to have a conversation with you. And so I want you guys to just remember that what we do is not just solve problems, but we solve problems by simplifying their situation. You are absolutely correct that there's people that have multi-million, decamillions of dollars and their situations are overwhelming, but 9 times out of 10, that's not who you're talking to, right? Those will come up and you've got sales support, you've got advanced sales, each of the carriers you work with who can help you with those. But a majority of the conversations you're having are going to be relatively simple, and it'll be an easier process for you if you keep it simple, and the clients will appreciate it if you keep it simple. Because if we think about historically in our industry, the idea of financial planning and wealth building is going and sitting in an intimidating office with somebody that knows more than you, with models on the screen and spreadsheets and calculators, and the client leaves there and they don't know what actually just happened, right? They never really grasp what happened. And so, you've heard me say this before, but it's not about the products we sell, it's about the stories we tell. And everything that we do has a story that resonates with 90% of people in our communities. And so again, just wanted to harp on that because it's so important for simplifying your process, simplifying the sales process, and hopefully being able to drive more business. The second thing I want to touch on is the trust planning. Most people think I don't need a trust because I'm not worth $30 million, right? If you've ever dealt with the loss of a family member, right, a parent, an aunt, uncle, a grandparent, it is messy. It is absolutely messy in finding documents, closing accounts out, getting power of attorneys, and dealing through the whole process of probate. Even if you don't have a lot, it could be 12, 18 months of calls to the county clerk, calls to this insurance company, calls to this financial institution, which I don't know about you guys, but I hate calling insurance companies, and you guys do it more than I do, honestly. But it's a very tumultuous process, and you're dealing with the loss of a loved one. Now you're being an administrative assistant. Now you're dealing with all these things that really could have been simplified if they just had trust set up. I have a trust. My sister has a trust. I mean, it's part of our family process, not because we are decamillionaires, but because we understand what this will do for our beneficiaries, for our families. If you just take the extra time, set it up one time, and then maintain it, it's a lot easier than waiting 30 years and then trying to figure it all out when a crisis happens. So I can't stress that enough. And you guys are in a unique position where you have access to a group like NetLaw that you can actually do that for people, right? Most insurance professionals and advisors have to outsource that, find somebody else that can do it, refer them, and start the process over again. You're already sitting with the client. There's no reason why you should be leaving that stone unturned. So I can't stress that enough. The trust planning, and then obviously the insurance piece of it going into the trust is something that's absolutely imperative and should be talked about more often. So with that, I will take any questions, comments, thoughts from Ms. Kimberly here, and we can continue the conversation.
So, as I started this call, thank you, Matt, very much. So as I started this call for all of you guys today, I said I want to keep this very basic because, again, it has to be simple. When I'm teaching, I'm like 3rd grade level. Not that I don't think people can handle more, but most people, especially when they're talking about money, it has to be simple because because money becomes so emotional for them, even though it really isn't, it's mathematical. The more simple we make it, the less overwhelming it feels for them. Matt just talked about this highfalutin office and, all this stuff. And I make the joke of, walking into an office with mahogany walls and a man in a 3-piece suit, talking like he's a brain surgeon or an astrophysicist. And we're all like, you're smart. I'll do whatever you say. But that's not how we want our clients to leave us, truthfully, right? And when we teach our clients and they truly understand it, we retain them too. So next time another agent says, hey, you should look at this, we're like, let me explain to you what I have because I know exactly what I have because I've been taught what I have. So I think all of those are fantastic points. So keeping it on the conversation of simplicity, in our proper protection section, which is step number 4, right? For all of you guys to remember, life insurance, that's our foundation, making sure our basis is covered, life insurance, health insurance, Medicare, all the insurances, right? In that area. Matt, tell us about term insurance with living benefits. Just basic, like teach me, what does that mean and why is that so important?
Yeah, it's a great question. And actually, my colleague Gary was up on the stage yesterday at this conference, and he got up there and said, if you opened up your phone and looked at the weather app, and it showed there was a 70% chance of it raining, would you take an umbrella? Would you think twice about what you're wearing that day? And the answer is absolutely yes, right? And so when we talk about life insurance, I hate to break it to you, but everybody dies. So it's actually 100% when we talk about people dying and needing some type of coverage. But what the industry has done over the last 2 decades is reimagined those insurance products to not just be death insurance, but to offer living benefits as well that you can use while you're alive, right? And so we had a testimonial we saw yesterday where a mother of a couple children, a business owner, was diagnosed with a very aggressive form of cancer. And she said, you know what, I know that if I die, my family's going to be okay, but I'm scared if I live, right? Because now she's got hundreds of thousands of dollars of expenses. The insurance companies are saying, okay, we're kind of at the end of the road. We don't really know what else to do with you, so we're not going to pay for any more treatment, right? And ultimately what she ended up doing was using her living benefits that she forgot that she had, going for experimental treatments, and now she's thriving. She's doing great. This is several years down the road. She was giving a 6 to 12 month life expectancy. We're now 5 years down the road. She's still maintaining her business. Her kids are now, almost finished with college. And so I think when I'm getting chills just talking about that, when you are in this business and you talk to more people and you experience your first death claim, you experience your first living benefit claim, which may not happen for a long period of time, but I encourage you to tell some of these stories, right? Share some of these stories about what these products can do. If you don't have any, borrow somebody else's story. There's videos out there. Lifehappens.org is a great resource of kind of industry compilation of testimonials and videos that talk about the power of either having insurance and having living benefits or not having them, right? There's a lot of different stories that can be told, but it's one of those things where I almost wish it was mandated, right? I wish that states would mandate this like they do our homeowners insurance and our auto insurance, because we all have those because we have to. But at the end of the day, people are thinking, well, if my house burns down, I can't afford to rebuild it. Well, what if your financial house burns down, right? What if you are sick? What if you can't work anymore? Nobody's bringing you money except us. We have the ability to change the trajectory of those people's lives, change multiple generations of lives by offering that. And so the whole concept of term living benefits is really very simple. The products are probably the simplest things you could possibly understand. You pay a premium. If you get sick or die, we pay you, right? That's all there is to it. There's no other components of it. And so when you talk about keeping it simple, that is probably the simplest, but the most impactful conversation you can have with your customers. I think it's debunking some myths, right? Because everybody thinks that their health insurance will cover any type of illness. And at the end of the day, it's not the case, right? They're going to pay a percentage. You're always going to have out-of-pocket expenses, which for a significant health event could be a couple $100,000. Most people get to a point where they say, we either have to sell the house, we've got to liquidate our retirement plans and start over when we get through this. And so it's debunking some myths of saying, if you have some type of illness, here's what's going to happen, right? Medicare is irrelevant in this conversation. Health insurance is quasi-relevant, but you also may have a situation where you leave your job because you're sick and then you don't have insurance anymore. So it's a matter of just simplifying the whole conversation and saying, if something happens, which I don't wish this upon anybody, but I think everybody knows somebody that has had a heart attack, a stroke, a cancer diagnosis, right? What do they go through? Ask your clients when you're sitting across from them, do you ever have somebody in your family that's gone through that? What was it like? What happened? How did that play out? Did they have any options? And oftentimes the answer is no. It's surprising that most people don't even know that living benefits exist. And so it's a matter of simplifying it. The product is already simple enough that you should be able to articulate that, but you've got to bring the passion behind it as well. I've either seen people's lives changed, or I want to send you this video to talk about, this is something that's a similar situation to you, also a mother, also a business owner. Here's something I want you to watch for 3 minutes. So it's a very simple conversation, but one that really impacts, so many parts of somebody's life. And so I feel like it should be mandatory for any adult to have a policy with living benefits. It's so inexpensive, it's almost stupid not to buy it, right?
Yeah.
That's how passionately I am about it. It's crazy that people don't even have it, or they give you objections as to why they don't need it. So again, for me, with the living benefits conversation, it's the fact that everybody will need it at some point. And would you rather have to liquidate all your assets, everything you've worked so hard for, or do you rather need to bring you a check for a couple $100,000?
I'm glad you touched on the employer life insurance, right? Life insurance through work. So if I've trained all of you directly, you know that great you have it, but I don't count that into your dime because as Matt said, if you truly get sick and you have a major event, you probably aren't working anymore. And when you stop working, you lose those benefits. So it's always important to have life insurance outside of work. When we're talking about the dime, and we go back to that methodology of how much life insurance should we need. For most people, it's an affordability conversation too, right? Like it's a risk versus reward conversation. So I think for our planning, the largest majority of that is typically in a term policy, right? Because as they get older and things happen, then hopefully we've got a permanent there as well, but maybe they don't need quite as large of a death benefit. And maybe they're young and they're just starting out and that's all they can afford, right? Or they're trying to get all their other pieces together and that's all they can afford. That's fine because it covers that need for now, but it's also convertible, right, Matt? So we talk about convertibility and what that means.
Yes. So convertibility, again, it's a matter, I'll always go back to this, is keeping it simple. And I think that most people get overwhelmed with conversions because they're approaching it at a point where the client is not expecting it, right? They're like, oh, Gail's calling me. She's asking about a term conversion, asking me to spend more money, right? But if you tee it up in that initial conversation and say, here's the goal. When I look at protection planning, you've got to have some permanent coverage, right? You look at the X curve, you look at the butterfly chart, whichever chart you want to use, it points to the fact that people need permanent insurance, right? And when most people are finally starting to realize that, it's almost too late. Right? A lot of people that come to me and say, hey, you know what, I'm 62 years old, my term policy is expiring, I've got diabetes, I had cancer 6 years ago, what options do I have? And I'm like, it's hard. It's really hard to plan at that point, right? And so when you set people up early on, I would, in that first conversation, if the conversation ends up being a term sale, there's nothing wrong with that. I'm glad you got the protection you needed. I feel really good about the solution. How do you feel about it? Great. I feel protected, right? We got living benefits. Awesome. There's one piece of the conversation. We talked about permanent insurance. It wasn't the right fit right now, but what I'd like to do is when we do an annual review to see if your needs are changing, right? Is your income increasing? Are your debts increasing? Do we need more coverage? Do we need to change the coverage type? One of the things that I'd like to talk to you about is converting pieces of this over time into something permanent. So we could do it in bite-sized chunks, and that over time, when you get to a point where you're 50, 60 years old, you might say to yourself, you know what? I have enough permanent coverage now. I don't need to worry about it. Because most people that are thinking about permanent coverage are waiting until it's too late, waiting until their term has already expired, and now they're exploring the permanent side. And so you've got to talk about term conversions in that first term sale appointment, right? Plant the seed so that when you come back next year and say, do you remember we talked about converting this, right? We're going to do this in small pieces, $100,000 now, maybe another $100,000 in 5 years. And slowly but surely, you're going to build up that product portfolio of permanent insurance that when your term expires, you feel you're in a good spot, right? So it's a matter of teasing the idea of a term conversion up front so that you can have greater success. They're expecting it. When you come back to revisit with them next year, they're expecting you to talk about a term conversion. They already have it on their mind. They're already thinking leading into that meeting, this is going to cost me another $100 a month. Gail's going to ask me, where's that money coming from? I got to figure this out now. They're already thinking about it. Right? But if you don't talk about it until you're 4 years down the road, you say, sorry, I haven't talked to you in 4 years, but I want to talk to you about a term conversion. It's somewhat suspect, right? It's like, okay, maybe business isn't great. Maybe you're trying to find another commission. But when you talk about it up front as this is my process, we're going to put the term in place today, but my process, everything I do with every one of my clients is we talk about converting pieces of it over time. And so you've got to find a company that has good term conversion privileges, that has good permanent products that you can convert to. Without evidence of insurability. The other piece of that is when you talk about, again, living benefits, back to that conversation, I have this conversation more than you'd realize. And actually, oftentimes it's with agents. I have an agent up in New Jersey who called me last week with HGI, and his wife is in the hospital with a severe brain aneurysm, ultimately had a stroke, had a couple of different situations going on. She's still in the hospital 6 weeks later. She has three term policies. Right. And so what she's doing is she's taking an acceleration on two of them from living benefits and converting the third policy. So you've got to have that flexibility. It's great if you get this cash up front, but in some situations, you're never going to be insurable again. And so if you have options and you have conversion privileges, you can now say, okay, great, I got this influx of cash. I'm going to now convert my term insurance policies into something permanent so that I know my family will have something long-term. And now you still have more living benefits on that conversion product. So conversions are something that you absolutely have to talk about. Again, I bring it up front in most conversations so that the client is expecting it. We've got to coach our customers, and that's one of the things that I feel we don't do a great job of, is talking about term conversions until we realize that they're running out of term insurance, or their term is expiring, or they're getting older, and we have to talk about it. But we don't do enough of preemptive planning on conversions.
Awesome. Thank you for that. So now we've talked about protection, right? We've talked about the term protection. We've talked about the need for permanent insurance, because that we both need all of it. Especially as we get older, we're going to be like, I need life insurance. I don't want to pay for that anymore, right? Definitely, that's a big part of it. Now let's talk about accumulation. So we all hear, this is where building wealth comes in, step 5, right? It's also part of step 4 because it is part of your proper protection. But this is like sexy money. This is what people are seeing on TikTok. That's what people are seeing on Instagram. And a lot of times they aren't quite sure how it works, but they're intrigued and they want to listen to it and they want to understand it. So tell us, 3rd grade level, tell us about an IUL. Tell us what that is and why people use it and why it's so exciting.
Oh, that's a tough question. 3rd grade level. That's like what I tell ChatGPT. I'm like, hey, tell me about this as if I'm a 5-year-old.
Tell me about this
really
like we're on TikTok, but compliant.
Right. Oh gosh, compliance, my nightmare. No, I mean, in reality, it's all about options, right? And so I think that going back to what you said earlier about some of these overwhelming conversations, most people are not exploring what their options are. They're doing what they know. They're doing what they think is the right thing. They're doing what's comfortable. And so everybody you talk to has a 401k. Why? Because when you join a company, they say, hey, here's your health benefits, here's your disability insurance, and here's your 401k, right? And we're going to put some money in there for free. And there's nothing wrong with a 401k. I have a 401k. I friggin' love it. Mine is all Roth and it's doing really well. And I've got no qualms about it, right? The whole story about, having a 401k is not that this is the devil, this is the enemy. We need to liquidate your 401k and dump it all into index products. But I think it's a matter of educating the customer, right? When you're talking about accumulation, there's a couple different things that typically come up. It's, how is this money accumulating? What is this going to do for me when I actually need it? And is it protected? Is it guaranteed? Is it predictable? And so when you talk about a 401k or an IRA or even non-qualified brokerage accounts, there's a couple of different components to that. The first is volatility, right? Volatility is something that a lot of people just can't stomach. It messes with you emotionally. People hate to see their number fluctuating on the screen. They don't like to see it go down. When it does go down, they're like, what a waste. I just put all this money in and I've lost it all in a 6-month period. And again, it's emotionally really challenging to see some of those fluctuations. Now, yes, you could have some significant upside, which is great, but I think the upside is oftentimes negated by the downside, right? People get really frustrated when they see that number changing. So volatility is a big part of it. We have strategies, not just me, but the industry that we're in has strategies to eliminate volatility, where you could say zero is your hero or you're never going to lose money, but you can have the same conversation and say, hey, if the market's down, you get to keep your earnings from last year. Reframe the conversation, right? It's not that you didn't earn anything, but you didn't lose. It's that you kept all of your earnings from last year, even though everybody else you talk to is down 15 or 20%. Now, is that money going to come back? Probably, but how much time do you have, right? So volatility is a big piece of the conversation. And when we talk about mitigating volatility, yes, with IULs and with FIAs, you do have a cap. You do have an upside maximum. But if you can eliminate the negatives or eliminate the zeros, what will that do for the overall growth of the account? And oftentimes it really outweighs the downside. So volatility is a big piece of it. The second piece of it is taxes, right? Again, nothing wrong with taxes, but you've got to think about the overall tax strategy. Some people say I'm going to retire in a lower tax bracket. That's great. I hope that's the case. I don't know why you want to make less money in retirement. I want more money coming in, because every day is Saturday when you're retired, right? You spend more money on the weekends, don't you? So when you retire, don't you think you're going to be spending more money? And if you're spending more money and you need to put more money into your account, your taxes will increase, which is going to affect your Social Security, taxes. It's going to assess your Medicare premiums. All of that will be more expensive for you if you have higher taxable income. So it's not just that taxes suck, it's that it affects every other piece of the puzzle, right? Do you want to pay more in Medicare premium because you didn't do tax planning 30 years ago? Do you want to have more of your Social Security check eaten up by taxes because you've got to pull more money out of your 401k, right? So volatility, taxes. The third is the longevity piece of it, right? The longevity piece of you retire, you've got $1 million sitting in your IRA, and now you start pulling money out of it, right? You start pulling money out, you have no idea how long you're going to live, and you have no idea what's going to happen during that period of time. So over a 20 or 30 year period, you're pulling out, let's say 4% per year. Okay. What if the market takes a dip? What if it's a 2008? What if it's a 2020? What if it's, one of these periods where the market has a significant pullback? The market is down and simultaneously you're pulling money out of the account. You will never earn that money back because you've removed it and you've realized all the losses. Now, if you're still working and you could say, you know what, I'm going to keep the money in there, it's going to rebound, that's great. That's kind of where I am. That's why I'm okay with the assets I have. But if you're pulling money out actively and the market has a pullback, well, now that money is officially gone. You've realized the losses, you've sold at a low point, and now that money will never rebound. The second piece of it is longevity and life expectancy, right? People are living long-term retirement that they did in their working years. They're retiring at 60 and living until 95, right? That's 35 years of drawing down an account. Imagine that piece of it emotionally, right? If you have a savings account and you're pulling money out each month, do you feel good every month or every year seeing that number decrease? That's what's happening. And you're getting to a point where people say, you know what, I'm 86, I'm still in good health. I've got less in my 401k than I started with, right? What's going to happen now? What if I live another 10 years? Again, it's the conversation is if I die, I'm okay, but I'm scared to live because you're not sure how long that money is going to last. Nobody knows when they're going to die. Nobody knows when a pullback is going to happen. Nobody knows when tax rates are going to increase. And all of those things play into, accumulation type conversations. And so when you talk about IULs, I know I got a little bit off track there, but IULs mitigate volatility. IULs can mitigate the tax consequences. IULs can give you predictable guaranteed income stream when you have things like an income for life rider, and you can take more money out of an IUL because of participating loans, right? When you pull money out of your IRA or out of your 401k, the money is removed. The money is now in your pocket and no longer sitting in that investment account. When you pull money from an IUL in the form of a participating loan, your money stays in the account, continuing to earn interest as if you never touched it. You realize how powerful that is? So when you talk about dropping bombs, there we go, boom. When you talk about the safe withdrawal rate, right? The safe withdrawal rate on a retirement account is typically 4%. The traditional withdrawal rate on an IUL is closer to 10%. And you could say, how could you possibly pull 10% out? It's because you're not taking any money out of the bucket that's earning interest, right? So your money is still earning interest, allowing you to pull almost 3 times the amount out per year. It's remarkable. So you've mitigated volatility, you've eliminated taxes, which affect Medicare and Social Security premiums and taxes as well. And now you also have a higher income stream. Who doesn't want all 3 of those things to happen? But again, there's miscommunications and there's notions about IUL being this, this scam or this thing that there's too many fees and charges. We've got to, again, simplify it and say, if you want all 3 of these things, here's how we're going to do it. But if you don't care about these 3 things, then yeah, continue tributing where you are right now. And I wish you the best of luck because I give you no guarantees around your current plan. So the accumulation side, not everybody is a candidate for a max funded IUL. But I think that when you have somebody that truly understands what you're able to do for them with that strategy, and it's not saying stop what you're doing over here and do all of this, it's maybe do a combination, right? Do your 401k up to your match, get that free money from the company, chase those higher rates of return. If you could be more aggressive with some of your assets because you already have protected things over here, that's a phenomenal story. Same thing with the annuity side, right? If I can guarantee that all of your living expenses are covered by this annuity, you can be as aggressive as you want with this other money because you know you have enough money coming in every month. Doesn't matter what happens in the market, you've got predictable income. And so now you can extend that legacy. You can duplicate or triplicate whatever other money you have because you have enough income coming in. So there's a lot of different components to accumulation, but I think that when you can simplify it and talk about the taxes, the volatility, and the life expectancy piece of it, and oh, by the way, having residual death benefit and having living benefits attached to it also, it really becomes a conversation that should be pretty easy for most people.
Well, obviously, everybody loves what you're saying, and James is like our explosion down there, right? Dropping the bombs with your passion, and who knew life insurance was so exciting, right? All right, so last question, but for you today and for everyone today, assuming people can't do accumulation because they don't have enough income or they don't have enough money, they're too old, they don't have enough time, whatever. We all have had a conversation about needing a portion of our death benefit in a permanent plan. And with Corebridge, you guys have the Value Plus Protector. Super passionate about that with that accelerated access solution rider. Zach is currently pitching one right now as we speak, which is why he's not here. But explain to people, and honestly, like, and correct me if I'm wrong, like I think in a perfect world, you've got your accumulation IUL for your retirement piece, and you've got your VPP with your AAS for your, what if long-term care needs piece. So talk to us just really quickly about that side of it from more of a protection, not an accumulation, because sometimes you can't do accumulation, right? For different clients.
Right. Yeah, great point. And I think, again, it's part of the conversation that you should be having pretty early on with the customer is if you're discussing or presenting a multi-policy approach, some clients, if you don't explain it to them, they're going to walk away and say, you know what, Kimberly just sold me 4 policies and I didn't even realize it. I gave her 4 policies. But when you can have the conversation with them and say, listen, this one is for this one is for that, this one does this one does this a little bit differently, it eliminates any of the confusion or the skepticism of what the client was just sold, right? People hate to be sold, people love to buy. And so when you can truly educate them, going back to the dime, right, show them how you're coming up with the number. If you can write down all their needs and show them the piece of paper, if you tell them they need $2.5 million of insurance, they can't come back and say, that's crazy, right? The number is right there. Which one of these do you want to change or eliminate or lower? Here's the pen, cross it out, right? You got to give them control. You got to give them the education of why you're proposing what it is that you're proposing. So when we talk about a protection type sale, the protection piece of it is very important because, like you said, not everybody is a candidate for an overfunded insurance policy, right? But the protection piece is something that everybody needs. Everybody talks about the ability to have legacy, have generational wealth, right? But at the end of the day, it's not even necessarily about that. It's about preserving whatever you do have, whatever assets you do have. So yeah, you might have your 401k, your IRA, you have savings accounts, but if one tragedy strikes, and we know it's going to happen to 3 out of 4 people, 75% of people will need some type of long-term care in their lifetime. So what are your options? Pull more money out of your 401k, which is going to increase your taxes even more, right? It's going to deplete your savings even faster. Why would you not transfer that risk to an insurance company? If you say there's a 75% chance that I'm going to need some money coming in to cover my cost of care in my 70s, 80s, and 90 years old, why would you not, for pennies on the dollar today, transfer that risk to somebody else, right? Imagine, again, simplify the conversation. If somebody told you that you have a 75% chance of your house burning down, would you buy more homeowners insurance? Probably, but the costs aren't that different. We're talking about, an average female at 65 years old will spend somewhere around $300,000 or $400,000 in out-of-pocket medical expenses during their lifetime. So you're talking about $400,000. That's a house in a lot of parts of the country. And so we talk about not just using this as leverage, which it absolutely is, but it's using it to preserve everything else that you've worked so hard for. Because one illness can not just wipe out your financial plan, it can wipe out your children's financial plan because they have no options but to liquidate their funds to help pay for your care, right? So the long-term care conversation is one that I'm extremely passionate about because I really feel our industry has shifted and is focused for the last decade on accumulation, which is nothing wrong with that, but we're forgetting what this industry started with, which was pure protection, right? Pure protection. Unfortunately, when you think about options, there's really not many. The only other option is long-term care. And I'll give you 4 reasons why long-term care sucks, right? Your premiums are not guaranteed. They're not even close to guaranteed. They're going to increase every year that you have that policy, anywhere from 10 to 30 to 50%. I've had calls with Gail. She showed me a letter from her clients that says, thank you for being a loyal customer. Your premium is increasing 45% this year. So now you're 65, 70 years old. You're getting a letter every year on the anniversary. You're expecting it to be a thank you letter for being a loyal customer, and instead they're doubling your premium or increasing your premium by 50 or 60%. And that can happen every single year. That's reason number one. Number two, decreasing benefits. You get to a point where you can't possibly pay anymore, and so you're forced to reduce your benefits. So now not only are you paying more money, but you have less benefit than you started with, right? That's number two. Number three, reimbursement base. You become an administrative assistant to your parent needing care. You're filing invoices. You're sending them to the insurance company every month. You're waiting for a check back, and then you start it all over again the next month. You become an admin assistant. You become an accounts receivable department for your family's affair, which puts strain on the relationship, puts resentment in place. A lot of other things come into play there of the reimbursement type contract versus cash indemnity. And then lastly, use it or lose it. There's a lot of people I've talked to, including my 91-year-old uncle right now, who is forfeiting his long-term care policy because the cost has gotten so high. He has no more benefits left. He's giving it up and he gets nothing back. He's paid premiums for 36 years on that policy and it's gone. So when you talk about life insurance, it's a guaranteed payout to somebody, whether it's you or your beneficiaries. There is no reason why people should not be thinking about protection insurance instead of accumulation or in addition to accumulation. And when you talk about protection, you've got to make sure you're protecting everything, right? Not just legacy, not just preserving your wealth. You have living benefits that are built in. That's great. And those are kind of the what if something happens. But when we talk about long-term care, it's more of when and how much is it going to be? It's not a what if anymore, unfortunately. What used to kill you is now a chronic illness. So people are getting diagnoses and living another 30 years. People have ALS and live 20 years. People have Alzheimer's and live 20 years. You know how expensive that is? We're talking about 150, 200 grand a year in many parts of the country. And the only option people have is to liquidate retirement funds or have their kids help out. And so that piece of it, I'm so passionate about it because I see this need. I see my own family. My parents are in their 70s. They don't have long-term care. They don't have insurance. They can't get it at this point. And it scares the heck out of me. And so we've got to, again, the passion is natural. It's not an act. I'm not a good actor, but it's so natural because I really feel that this is an area that we're missing out on. And we have an obligation to our customers to talk more about this side of the puzzle, right? The protection side. You've got to make sure you're protected, and then we can focus on accumulation.
Well, I appreciate so much you joining us today and giving us all the information. One point I want to make to all of you guys is if you talk to your client like Matt just talked to you, and you're as passionate as he is about their plan, about all pieces of it, I promise you they will always buy because they know you have their best interest at heart and they hear you and they're listening to you. So it's more about that relationship and that connection and letting people know that you care and explaining why. Right? Just tell me why. I don't know if you guys remember years ago, Simon Sinek came out with Start With Why, right? And he was talking about all these different computer companies and why Apple was so much better than IBM, even though IBM was longer and bigger and all that kind of stuff. If you don't remember that, go buy the book, go listen to the I'm sure YouTube or TED Talk or whatever. But that's what we have to do in our industry. We have to start with why. We have to tell them why. We have to be passionate because we are right. We are right. And they have to hear it and they have to know that. So thank you all for joining us today. Thank you so much, Matt, for jumping in and saving them from another 30 minutes of my voice. And I appreciate it. So tell all your friends that were making fun of you as they walked by that you're done now and you can go make fun of them. Thank you. Bye, guys.
Awesome. Thanks so much, guys. Appreciate the time. Bye-bye.